Good morning, it's UPB OptionMillionaires.com. It is a Thursday, January 23rd. Last week, I wrote a post about Nu Skin when the stock was bumping up against resistance at the 139 level. The 130 puts, I alerted them via private Twitter at 50 cents. I called for a collapse. You go to StockTwits, go to Twitter. I had a couple tweets saying that Nu Skin was going to collapse, and this is about as collapsible as it gets. The stock plummeted, hitting a low below 70 bucks. Those 130 puts at 50 cents were worth over $60. So just imagine buying something for 500 bucks and 2 days later having it worth over 60 grand. That is why we trade stock options. That's what it's all about here at OptionMillionaires.com. Been doing this for a long time. We're great at finding option trades that make this kind of money. Just imagine that, buying something that's worth 50 cents, being able to sell it for over $60 a couple days later. That is enormous, and that's what it's all about. So that's Nu Skin Enterprises. What's the next one? Well, I don't know. When I find it, you can be sure to be at the blog at OptionMillionaires.com. As Nu Skin was, I also did a video on it and alerted via private Twitter. But let's get into today. We have earnings out. We had earnings last night. I think this is going to be a great earnings season. Netflix breaking to the upside. You can see this actually some sort of a bull flag here, breaking out to new all-time highs here pre-market, up over 392. And then we have on the downside stocks falling as well. So it's going to be, to me, it's going to be a great earnings season because volatility is pretty low. We have Google earnings coming up, I believe, next week. And Google broke out, see this gap up here? Google broke out last earnings season to the upside, a tremendous move over $1,000 a share, and has now just been melting higher. So it's going to be interesting to see where it heads. But I love this season. This is going to be one of the best earnings seasons as far as trading out of the money stock options we've seen in a long time. But again, just keep this in mind. Trading out of the money stock options for earnings is a high risk proposition. For instance, if you were buying IBM calls heading into earnings, not so good, as IBM plummeted yesterday. So it's not all peaches and roses. You got to be careful. Got to be careful. We have earnings after the bell. Microsoft, I think, is going to break to the upside here. It broke out here on the 14th, the middle of January. It's been consolidating ever since. I love the 37 calls here, and I'll probably get into that trade early in the morning. Hopefully we'll open flat. We have actually futures are lower. Get out of town. Yeah, stock futures are lower. Over in China, the PMI, the Purchasers Managers Index, the PMI, decline. It's actually in the contraction area, I believe. Usually above 50 means expansion. Below 50 means contraction. Contraction means shrinking. Expansion means expanding. I'm sorry, I know. So we had some contraction, which was highly unexpected. Stock futures headed lower. We had the S&P 500 futures falling. Look at that decline there. Really, right after the numbers were released. We also had the Nikkei. Let's pull up the Nikkei futures just to get crazy. Same kind of thing. We hit our highs there. Been pulling back ever since. We're at our lows right now. And the dollar index, kind of like pulling back a little bit. So we have a red day to start. Amazing. That's unbelievable. But we do have earnings again after the bell. We have Discover Financial, which has been up. The stock was at $10 back in 2009. Look at it now. Hello. We also have ISRG, which is looking at, according to the option market, about a $36 move to the upside or downside. You can see we broke through significant resistance. This could be, and remember, see these big candles here? We could see another big move up to this about 510 level. Is that crazy or what? So I'll be getting some out of the money options, but not going to dive head first into it. And I wanted to bring up some charts because a lot of people ask, oh, well, chart patterns, support, resistance. Let's look at some chart patterns here. eBay, look at eBay. This is a beautiful consolidation. I talked about this at the start of 2014, actually back in December of 2013. This consolidation, this year-long consolidation, was going to result to a move to the upside. And that's what we're getting. We're just at the top of this channel here. And 57, once we break that, we're going to break out to new all-time highs there on eBay. Or I shouldn't say all-time highs because we go back in time, use the time machine. We're looking at over 58 here back in 2005. So eBay is going to be a stock to watch. Is up over 6% yesterday after the bell. And if you want to look similar patterns, What you're looking for is when we have an uptrend, but like we've had since 2009, you're looking at a consolidation pattern. And when we're in a trend that's going higher, consolidation is going to result in higher prices when and if it does break out to the upside, like Baidu. Look at Baidu. Remember I brought up Baidu, 2009. You could look at stock twits back earlier last year in 2013. I was talking about this consolidation phase, that a break of this wedge here was going to result in higher prices. And boy, did it ever. Up over 100%. How about NTAP? Same thing, upgraded recently. Same kind of thing. We have this beautiful bull flag, consolidation, break to the upside. So you look at NTAP's probably going to get over to the $60 level. How about SanDisk? SanDisk reported earnings yesterday. Again, look at this. Just like eBay, except it's not a year. It's almost 2 years of 2.5 years of consolidation. Look at this. Finally broke out to the upside in 2013. Reported earnings was up to new multi-year highs after the bell yesterday. But you can see the consolidation and then the break to the upside is very important to look at. We have earnings. Starbucks. Look at this. This is falling here. Broke multi-year support from 2009. Drew a trend line up. Been bumping along it, and finally it's like, oh no, sell me. And that's what it looks like is going to be the trade here, really, for Starbucks. We could see a move back down at about the $60 level. So to me, I'm going to buy out of the money puts. Although I like the trend for this market, and I do like Starbucks long term, I think we can see continued weakness here for Starbucks. And we could see a sharp decline here to about the $60 level. That'd be obviously over the long term. I'm not calling for a noose and NUS type collapse. Likely, more than likely, pull back to about 70, 67.50 over the next couple days for Starbucks. Again, nothing is written in stone. And then tomorrow before the bell, we have Kimberly-Clark. So if you have Starbucks and you start losing money, you bought the calls, you can buy some Kimberly-Clark because you'll be buying some tissues, right? And look at this. Tissues have never been more in demand than they are now. Kimberly-Clark Corporation is up just off all-time highs, and you can see this is an awesome bull flag here. See the spike? This is the flagpole. Hello, flagpole. Hello, flag. So Kimberly-Clark, you want to play it to the upside. I did about, the last time I bought Kimberly-Clark calls was about 1.5 years ago. The premiums are so inexpensive on them because nobody expects a sharp move for this stock that if the stock, you could get the 110 calls pretty cheap. And I'll be looking at it. I could bring up a price, but I just don't have the time. Looking for a move to the upside for Kimberly-Clark. We also have Bristol-Myers Squibb reporting earnings before the bell. Bristol-Myers Squibb, there we go. Look at that chart. Beautiful. This is a long-term 20-year chart. We'll pull back in just a 5-year from 2009. And it's really been on autopilot as well. We've had some bumps along the way. But really, the move is starting to get pretty wild here. Pull up some of the studies. You can see it gets overbought and just gets sold off a little bit. Overbought, sold off a little bit. We sold off, so let's look for overbought, which means Bristol-Myers Squibb's going higher post-earnings. We have Procter & Gamble. This is a stock that also hit new all-time highs, is pulling back here, but a little more of a moderate to sharp decline off its highs, $6 off the high. So I'm not sure what to make from it here, other than the fact that it's getting close to oversold territory. We have State Street. Remember State Street back in 2009 was getting mauled. Hammer, remember, there was all sorts of rumors coming out about some of the assets they held, etc. And well, anyway, State Street's reporting earnings, and you can see it's just off of all-time highs here. And I don't know. I mean, what are you going to do? But think that the trend is going to remain to the upside. If you look at the long-term trend here, certainly has been the friend for State Street, just like pretty much every other stock out there. For the S&P 500, look at this. I'm just going to pull this chart up before I call it a morning. This is my morning outlook. I like McDonald's. Let me pull up McDonald's. McDonald's will report earnings in about 30 minutes or something like that. You can see the move up, consolidation. You can draw the trend lines here. It's the top, upper part of the trend line, bottom part, it's a channel, consolidating. I think it's going to move to the upside. Actually, if you look from a longer term perspective, look at this. This is a cup. This be a handle, cup and handle, continuation. So when you get an uptrend and you get a cup and handle formation, which is basically consolidation, more often than not leads to a move to the upside. The McDonald's options are super cheap. I alerted the $97 calls at 30 cents, which expire tomorrow. So it's a wildly risky trade. But again, if we get that 3 to 5% move to the upside for McDonald's, going to be a lot of profit there. So let me close out with the S&P 500, which has been seeing support at the 183 level. And right now we're at 183.50, I believe. Let me just pull up the futures here. Okay, there we go. We're at 183.61. If you want to look from a short-term perspective, just over since the start of the year, the 183 level has offered significant support. We almost hit it 2 days ago. And previous times we've hit it, we've bounced sharply. And this trend line from the all-time highs here, back to the start of the year, has been holding. This is the all-time highs at the start of the year. This is the middle of this month. Has been holding. So this is bullish as well. We're at 183.60. We're right here. As long as we hold this trend line, don't bounce, fall too far below it like we did 2 days ago, we're going to see continued strength, I believe, and then ultimately we're going to break out to new all-time highs before at some point we're going to get a massive plunge to the downside as everybody runs for the hills. Oh! I don't want to instill fear into the marketplace when there is none to be instilled, because there is no fear in this marketplace. Look at the VXX. Just been getting pummeled. Hit new all-time lows recently. Again, anyone buying the VIX, doing really good. Yeah, honey, bought out 3 shares of the VXX at 7,500. CNBC says volatility is supposed to rule the markets over the next couple of years, so I think I'm going to do just fine. And it's like down here, well, honey, we're going to have to move into an apartment because CNBC was wrong. There was no volatility in this market. It's getting sold hand over fist. All right, UPB here, optionmillionaires.com. I'll see you in the chat room if I get into any trades. I posted a couple retailers I think are going to bounce. And heading into the middle of 2014, we have some earnings trades coming up. Finally, FIO brought this up as well. FIO! And every time I hear FIO, when I do the chart or whatever, I'm like, I'm on FIO. Dun, 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 dun. I'm on FIO. Anyway, I can't sing. But anyway, I love this chart for upside. SanDisk, Western Digital are moving up post-earnings this morning, and I love FIO for a move over $10. Then ultimately to fill this gap, and then that's it. I'm going to call it the $13 gap here, and then we have another gap up here at 17. We'll see when that happens, but right now it's a beautiful upside trade. The options are cheap. All right, I'm on FIO. All right, UPB. I'll be back. I'll see you in the chat room at optionmillionaires.com and my next morning video. Goodbye.